One of the things I've noticed is that passive investors want to invest. They want to write the $25,000, $50,000 check, or there's plenty that want to write $250,000, $500,000 and really be more of an owner without being an owner, but they really don't know what they're investing in. So I want them to go through, in our community, the same exact training and education that someone who's going to be a self-storage owner operator goes through, because I want to bring them together. I want them to understand what the deal they're investing in, the same way that the guy I teach who's doing actually the hard work, the really hard part is out there, the grind, going out and finding the deal and evaluating, underwriting, closing it. And I want to bring them together on our platform.
Welcome to Truly Passive Income. I'm Neil Henderson.
And I'm Clint Harris. And today's guest is Joe Downs. Joe's the co-founder and CEO of the Bellrose Group. It's a commercial self-storage investment firm focused on buying from mom and pop owners and building niche strategies within the niche. With over 20 years in commercial real estate, Joe has reinvented himself through multiple market cycles, from financial advisor to distressed debt investor to storage operator. And today he helps investors access double-digit returns in storage, and he is developing large format pro storage units built for business owners in booming e-commerce and others in the economy. Joe, thank you for joining us here. I'm really excited about this conversation. How are you today?
I am great. Thank you so much for having me.
Yeah, absolutely. We were just talking and saying that it's actually been a while since we've had another storage pro on the show. And it was actually someone that you're already working with and doing a lot of great things with, and somebody that we hold in high regard. So very excited to have you here. Tell us a little bit about your background for everybody that doesn't know who you are and what you're up to.
Well, I heard you read through it, and every time I hear it, it's like a little PTSD of all the things you had to go through to get to where you are today, right? But
yeah, we didn't.
That resonates.
There's some scars in that paragraph.
Yeah, but and I've had this conversation with others, but those scars mold you to who you are today, and you carry those positive, and usually it's the negatives, right? Because there was a lot of reinventing going on, and from financial advisor to this to that to get to here. With the exception of one company I still have, but there's scars from that because that's what led me to self-storage, was my distressed debt company, which we still have. But there was a period of time where there was regulation. The CFPB was created, the Consumer Financial Protection Bureau, you guys are familiar with. And that put some hurting on debt sales from banks. So I was reinventing again. All of my reinventions before, reinventing myself, I mean, I'm not an inventor, but reinventing myself, I've, landed in a new place. It's rare that I actually have one still existing, but we just had to survive it. But that's what led me to self-storage was, oh boy, this is not a business. This is a hobby. I got to go find a business. And who you mentioned was your last guest. You didn't say his name. But that same person, Mr. Scott Myers, is who sent me an email. And I guess I was on his list somehow, somewhere, some way, whatever. And the email that I opened, he got me to open it, it blew my mind. There's a paragraph in it that said 80% of all self-storage facilities were owned by mom and pop. And knowing nothing about self-storage prior to that email, like nothing, never rented it even. I was shocked. I thought Public, Extra Space, CubeSmart were the market. And here I'm learning in this email, no, they're 20% of the market. Now they're the market in the major metros, but they're not the market. And that just screamed opportunity. Mom and pop screams opportunity to me. And that's how I landed in it. I tell my kids all the time, be curious, not judgmental. And the curiosity hasn't killed me yet, but it led me here.
Yeah, it's surprisingly how fragmented of a market it really is. And with so many mom and pop operators, one of the things about that is that they typically are not great at marketing. So I don't think people even have the visibility to understand that the vast majority of these are not something you even know about. Some of these places you find, they don't have a website. Nobody's answering the phone. They've been full for 20 years and they haven't had any turnover, but they also haven't increased the rates. You got doors rusting shut on some of them. Every facility out there seems like they have somebody that's been in there since day one, and maybe they opened 28 years ago. It seems like it's quickly consolidating, but the reality is, as you're having that roll up and things are moving towards the operators that are creating a conglomerate and bringing a lot of these operators together, that there's a value roll up and there's a bump there, and there's a cap rate compression that's happening as well. So it's going to take a long time to get a lot of this fragmented market to really consolidate. And it seems like it's a little bit of a gold rush in what honestly is considered a pretty boring business. Like the idea of storage, you're just renting someone a box of air.
Metal box.
To be honest,
That's what we say.
It's very important.
You're
a
renting
metal box.
a metal box.
of air.
There's nothing inherently special about that, but I think the business of storage right now is very, very intriguing and it's moving very rapidly. It's been fun to see the transformation. I know. Go ahead, please comment.
I just wanted to piggyback on that. I read an article a couple months ago. I've probably been saying that for a couple months within the last year, from Forbes. It said 2.5 million cash flowing businesses will change hands in the next 10 years because they're all owned by people 65 and older. That describes a major segment of the self-storage mom and pop industry, like the segment. So there's another saying, or this saying I like to use is, if you want to beat Tiger Woods at something, you can, just don't play him in golf. And maybe that's Scotty Scheffler today, but you get the point. And so who's the Tiger Woods and the Scotty Schefflers in self-storage? Neil's raising a hand, so maybe it's Neil.
No, sorry.
I don't want to play you in golf either, Neil.
Hey, Joe, I can answer that. It's not Neil.
Yeah, it's not me. Sidebar. I'm going to pause here for just a second. Sorry, we should have delivered this before we started. Let's pause for a second because we'll edit this out. Clint and I make hand signals at each other to let each other know who's got the next question.
You did tell me that, actually.
Oh, okay.
I was trying to make a funny joke that you were raising your hand to include yourself with Scotty Scheffler and Tiger Woods.
It's okay. We'll edit you out. Yeah, all right.
Shoot, Clint. You guys go on.
Start at the top of that response and keep going.
Yeah.
You were on. There were some nuggets in there. Keep going, Joe.
So there's a saying that I have: if you want to play Tiger Woods at something, you can. Just don't play him in golf. And for us, Tiger Woods is Cube Smart, Extra Space, those household names. And then actually there's a layer of names you guys might know, but maybe your listener wouldn't, because you got to be in the space to know the names. Like you see them at conferences, but you don't see their names on the sides of buildings. And there are the institutional players, but they operate right now. They used to operate in the 50,000 square foot facility and up. Now they're down to 40. They might even be encroaching below 40. But you're fairly safe below 40, or let's say this, you're very safe below 30,000 square feet. You buy a 30,000 square foot, I'll bet you 95+% of storage facilities that are smaller than 30,000 square feet are owned by mom and pops, and they're cash flowing. And that's what I mean. And what does that represent in number of facilities in the United States? I don't know. Minimum 15,000, maybe up to 30,000. Probably somewhere in the low 20s, 20 to 25 is where I'd say that number of facilities lives. Next 10 years, ample opportunity. And when you to tack onto, you're right, you nailed it. There's nothing special about it, except there's some unique things about it. Like, if you think about a hotel, they manage their rates by the night. That's super operationally intensive. On the other side of the spectrum, you have multifamily. You have an annual contract. Storage, you're managing monthly. So you can start to see trends and adjust as you go within the year, not as intentional as nightly, not as unintentional as yearly. You're not stuck in something. First-time buyers, SBA. They get to use the SBA for 10% down. They can put 10% down. Just look at simple math. $1 million facility or $1 million storage facility or $1 million 20-unit multifamily, right? 20-unit multifamily, I need $250,000 to $300,000 down, not including closing costs or CapEx or anything. I can buy a self-storage facility with $100,000, not including ABC, XYZ. And by the way, my CapEx on self-storage, I promise you, is less than multifamily. So it's just such an advantage to get into the game for anyone listening who's thinking about you're in single family looking to make that next progressive move through real estate, or you're just looking to get into it. I don't think people realize how accessible self-storage is for most people.
All right. So we're going to we're going to jump into the deep end here a little bit because we're all storage veterans here. And you've got how many facilities of your own?
We've acquired 20. I don't know how many we sold some. So I think we're sitting on 14, but we got 2 under development, 3 under contract.
And how long?
And we teach students. So we're also involved in another 20 or 30 at any given time.
Got it. And you've been in storage since
2018.
Got it. So, it's basically you and I got in around the same time, and it's been very interesting watching, as a now a really deep self-storage industry watcher. And I'm in it now, and so I see daily what's going on. Self-storage went through a boom like 20 you talk to a lot of veterans and they'd say self-storage is probably kind of hitting a peak of a cycle right around 2019. There's a lot of people who were like, yeah, we're kind of hitting that end of the cycle. And then COVID comes in and just shakes it up, and reset that cycle. And all of a sudden you had this huge boom from like 2020 to 2022. Since then, I'd say, as somebody who's been in the storage industry, we've been in a bear market the last 3 years. One of the challenges that we're finding with dealing with those mom and pop owners is a lot of them have got their facility valued back in 21, 22, and they've still got that number in their head. And now interest rates are a lot higher, folks. Rental rates are way down. That that valuation's probably not there anymore, and unless you've owned it for a long time, you're not going to get quite as much money as they maybe thought they were. I'm just curious about those conversations and how you have them with those mom and pop owners now who are selling, and how to, get them to understand where we are in the market right now.
I would love for you to tell me. No, in all seriousness, hey,
Yeah.
talk about PTSD, that 22 to 24. So what I always say is COVID giveth and then COVID taketh away. And it wasn't just COVID. So COVID spiked up. What Neil's referring to is because everyone was working from home, we cleared out rooms, we did whatever. Normal occupancy in self-storage, if you look at the history of it, is we'll say stabilized, depending on your market. I'll give you a range, 85 to 90%. During COVID, we hit 95, 98% across the board, which obviously drove up, your occupancy is driving up your rates drove up your values, and interest rates were at all-time lows. So it was the perfect concoction if you were getting out. So to your point, Neil, if you owned for a while, there was no greater time to sell than during COVID. That was money you wouldn't see if you held on later, right? So that if you bought during that time, that was challenging. And then Neil, to your point, there were brokers came out of nowhere. People were just buying self-storage. You didn't even know how to operate self-storage because it was worth more a year later. So the entire market was not only shaken, like you said, but the trees were shaken, meaning people mom and pop sellers that were never contacted before were now being contacted and told your facility, which you thought was worth $1 million, is worth $3 million or $2.5 million, or some astronomically much higher number than it was worth 2 years earlier, and unfortunately was 2 years later. And that's what you were referring to. Those were some very difficult times when in 23 and 24, we saw interest rates go up 400 basis points in 9 months. Which crushed values. We also, we talk about, we didn't talk about on here, but you guys know this, and I'll make sure your listeners know. Self-storage is great in great times, economic booms, because we buy a lot of crap, right? And we as Americans are in general are hoarders, right? We buy stuff and we toys and we want it and we store it, and then in bad times, recessionary times, when we're downsizing, dislocation, all the negative D's that we could throw out there, all those terms, is great for self-storage. That's why self-storage is recession resistant, because it's actually a pretty good time for us. It's the time in between, like we experienced in the prior administration. I'm not making this political, but it's a fact. we not only saw the interest rates balloon quickly, we had a period of stagnation. Ask any real estate broker, mortgage broker, title company how they did during that time as well. There were no transactions. Not the values, the market didn't crash. Real estate market actually continued to go up, the values, but the transactions were nil. And without that, that's the first time I think self-storage, I've admittedly only been in since 2018. So maybe this happened in the 80s, but it was such a different business back then. I don't know that it's ever lived through a period of stagnation, and we just did. And that made it very challenging, Neil, to your point, with all these sellers who have inflated values in their heads, not accepting reality. Now, here's the good news. A lot of those sellers weren't in the market to sell back then. So I'm not talking today, to people who have inflated numbers in their head. The only reason they sometimes think their facility is worth more than it is because a broker has gotten to them and promised them it's more. Right. And this I'm talking off market deals, not listed deals, obviously, because the broker got to them and was successful. So, but even the listed deals you see out now are not as inflated of values as they used to be coming out of COVID. They're actually it's almost back to normal, almost back to like when I first started in 18 and 19 and 20, and, started to get nuts when COVID, probably 6 to 9 months after COVID started. Remember, it was only 2 weeks to stop the spread for several years. But my point is we're now having normal conversations again with people who did not have those inflated values in their heads. And even those who did, unfortunately, and there's no good way to say this, they're older. They're in their 70s. And life happens to you, and it happens to you fast in your 70s. The test that 2 years ago was nothing is now not nothing anymore, or someone got sick, or somebody passed away maybe, or your life changes. All of a sudden, you do want to be in Florida in that house or in that RV traveling the country and not dealing with these headaches. So a long way of saying it was a tough road to get there. To this conversation today where we are, but we're here. And on top of that, and I say this, it sounds so self-serving, especially as someone who teaches this and has a community of people. I'm going to acknowledge how self-serving this sounds. But trust me when I tell you, there's never been a greater time to buy self-storage than right now, except for like 1980, and if you've been in it for that long. But right now, we're buying trailing 12s that are on sale because they're not reflecting the performance that you're about to have. Right. And you've got interest rates that have normalized and are actually coming down. You've got this current administration with so far a fairly healthy economic track record that's been pretty good. And none of the policies are even in place yet. So I'm not going to look you in the eye and tell you there's a tailwind at my back right now in self-storage. I will say it feels like a bay breeze, and I think it's picking up.
I love that. What a great analogy. Yeah, listen, on those mom and pops, you're right. A lot of them have recency bias. They've seen 4.5 caps, and now it's 6.5, 7s, and still shifting. But some of them have that recency bias from that inverse sticker shock of a broker getting to them and telling what their property is worth. The person I've seen having the most success with that is implementing a strategy where they can help the sellers get there, but you have to factor in the money that typically would go to the bank as interest. And making multiple offers utilizing seller financing and be like, hey, I can offer you 3 million, or I can offer you 3.6 over this many years with this balloon payment. This is the way you want to do it. You've owned it for this long. You probably don't want to show the taxes anyway. A lot of times the money that you're looking for, or the deal that you're looking for, or the break or the rate that you're looking for may already be equity in the deal. If they've really owned it that long. I think there's room for unique strategies there as you're helping people unwind a 20, 30, 40 year situation sometimes that they've been in. That's one way to try to create value there and have a strategic advantage. The other is you change the basis. Well, how do you change the basis? For us, the basis means storage conversions. And that's where we're focusing on. We buy old Kmart, grocery stores, warehouses, big box retail, furniture stores, boot factories, carpet factories, you name it. We got about 800,000 square feet plus now of whatever it was that's being converted into storage. because we can do that for half the cost of ground up development and in half the time. But it's very challenging. And that construction sounds easy. You take a big box, you chop it up into little boxes, and that's it. The reality is there's a lot more to it than that. And luckily we have GCs in-house. But if you're paying retail cost for a building, the construction and the management, the juice is very likely not worth the squeeze. But that's one way for us, because of the vertical integration, we can kind of cut that basis in half. And that's our niche, right? The riches are in the niches, and that's the direction that we're headed in. But you mentioned something earlier, may honestly have been before we started recording, about the holy grail of conversions. Storage is a blanket term at this point. In my mind, when I hear storage, like, man, there's a lot of different things that can be storage. Roll-up industrial man cave units can be storage, right? It can be climate controlled. It can be non-climate. It can be boat and RV, covered, uncovered. It could be fenced in tractor trailer parking. There's a lot of different things it can be. There's several different flavors that you do that and have looked into that we have not. But you mentioned that holy grail. So within your storage tool belt, what are some of the tools that you're looking at or utilizing when you're identifying a project for development or expansion or conversion? Where does your brain go as a full-time professional in this space?
Yeah, great question. I'm going to answer that second. I want to comment on your first comment. 100% agree with you on the seller financing piece. Of the first 20 deals we bought, maybe 8 were seller financed. Of the deal, we've had some deals fall out of contract for various reasons, but of all the deals we put under contract lately, or which was probably 6, but we've had 3 fall out for different reasons, I think 5 were seller financed. There's a shift for sure, because you're able to squeeze. You gave a pretty big delta example there with $600,000, but we are able to get these sellers another 100, 200, 300 maybe, versus bank financing, because we can play with the other dials like the interest rate or amortization, or interest only even. In terms of the verticals, I love what you just said. This has been a passion of mine for a while. I actually have to force myself to put the self in front of storage anymore, because what we're building, the community we're building, Storage Moguls, there's not even self in the name. And I tell people self-storage is probably what brought you here, but storage in general and all of the adjacents that you can find yourself having fun with and finding opportunities with are built on the backs of your basis and knowledge of self-storage. So in our community, in our education platform that we're rolling out shortly, either around when this podcast is released or shortly thereafter, it's thestoragemogul's.com, if I'm allowed to I'll promote here a little bit.
Yeah, all good.
It's about storage. So we're going to have a core underwriting course, which is 75% of everything you need to know, whether you want to be in self-storage, IOS, which is industrial outdoor storage, boat and RV storage, valet parking, or / we're calling it just parking. I kind of come up with a better name for that vertical, because like we have one facility where we park cars for the soldiers up at Fort Drum. Because it's the most deployed base, but it's freezing up there. Like they probably have 4 feet of snow up there right now. So we park the cars inside, and we turn on the engines and drive around a little bit. So we actually have a staff there making sure the engines don't freeze. But that's like, we park them like Tetris. So we just call it valet storage, and that could be boats and RVs valet storage. But then there's also Truck Parking Club, which is the Airbnb of truckers who need nightly, weekly, or monthly storage for the trucks themselves, right? Which is really just an iOS play, industrial outdoor storage, right? And then we've got Pro Storage, which we didn't create, but we are recognizing this needs to be a brand and it needs to be everywhere. So our brand is Store Pro. That's what we're building the first 2 of. One in Greenville, South Carolina is our first one. And then we have dirt under contract in Egg Harbor Township, New Jersey to build our second. It's about 90,000 square feet of, contractor storage, small business storage, also doubles as boat and RV storage, fully enclosed, because you can drive an RV into it. They're that big. If you look at a self-storage facility, I know you guys know, but for your listener, the 2-bedroom apartment of the self-storage facility is the 10 by 10. It's the most common unit size. It's if you're listening, it's 10 feet deep, 10 feet wide with an 8-foot ceiling, right? It's 100 square feet. Maybe in storage facilities, we've had 20. So we have a handful of units that are 300 square feet, 400 square feet, but those are the 4-bedroom apartments, right? Unheard of. You don't want them, and they're very rare. And if you have one, you have one. Pro storage, but they have lower ceilings. Pro storage, our smallest unit is 450, 500 square feet, but we've got the 16-foot ceiling and the 14-foot roll-up door, right? And they're wide enough for whatever, for your inventory, for your trucks to park your trucks into. And we rent them month to month. And so when you have that unit size, and that you have this new market, and when I hear you say, I'm buying Kmart's and converting them into self-storage, my first reaction to you before we started recording, which I'll share with your listener now, is, well, in your feasibility, in your market study, Kmart's, I don't know what they average, maybe 100,000 square feet. The Kmart, the Sears, the big box that's empty. What were the old tech ones? CompUSA, or I don't even, Best Buy. No, Best Buy's still around. Whatever the big ones were. Is your market need 100,000 square feet? And if it doesn't, why are we forcing it on the market? Or why am I trying to make a deal work with 30,000 square feet of self-storage? Because that's what I know my market needs. What do I do with this other 70? Not that you can't get creative and put triple net leases in there, but now you've got this other asset class. So who's your buyer, right? So your buyer is CubeSmart your buyer? Is Public your buyer when you are self-storage and a gym that's a triple net? Or is Public your buyer if you're 30,000 square feet of self-storage, 70,000 square feet of pro storage, and your parking lot is boat and RV canopies? Well, Public, CubeSmart, and Extra Space already have their tentacles into all of that and want more of it. So what I love about the conversions is, and I'm not making them out to be super easy, Clint. I know there's plenty of hair and risk there and all that. But if you can find the right deal and the right, either you're vertically integrated like you guys, or you could assemble the right teams. I love that route because I love the exit for it. I'm now designing my storage facility for what that market needs versus trying to put a square peg into a round hole. And now I could look at all of those big boxes and say, what do we want this to be? Maybe it's 70,000 self and 30,000 pro.
Yeah. Well, it's an avenue we've explored as well, not on any of our conversions, but we recently had a project under contract, piece of land we looked at. Wasn't going to work for storage, but we did explore the idea of a ground up contractor garage, sort of man cave, luxury man cave kind of thing. And one of the things that we love about it is that you're talking, you open a 100,000 square foot Kmart, all self-storage, 750 units. Now you're white knuckling it as you rent, 1 or 2 units, every week, and you're just like hoping to, lease up to stabilization.
Your 24-month lease up.
Yeah. Oh, right now.
So you want to go there? Let me give you
48. But hang on.
Okay.
We're probably going the same place. Is with a contractor garage. Now 50. you gotta, you rent 20 of them, you're 50% occupied. And at the same, at probably a higher price per square foot than you were getting with storage.
Should be more. Can I give you another reason?
Go for it. I want to hear it.
When you open that 750 unit Kmart converted to self-storage, who's your customer? How do you target them?
Residential density for the customer is usually
Spare
1, 3, 5, 7 miles the max. And your spare feet.
Our pro forma tells us, and we have tons of confidence, and the lender agrees, if we build it, they will come. If you think about it, that's what we're doing. With pro storage, I don't have to do that. I can actually market to my likely customer. I don't know if it's Neil or Clint that's going to rent a self-storage 10 by 10. I know there's Neil and Clints out there, and there's enough of them because the market, all the demand drivers say they're out there. And it's going to take 24 months to, maybe you pointed out, Neil, 48 months. Okay, fine. I agree. Call it 3 years. If I've got 100,000 square feet. We'll put it this way. In Greenville, we're building 92,000 square feet of pro storage. That's 137 clients. And I know who the likely clients are. I know Neil's Plumbing and Clint Electrician Company are targets for my use case. I can actually market to you. We expect to collapse that lease up to 12 months or less.
So are the actual units like inside of this? And you're exactly right. Like within the Kmart that we just bought, it was actually not it was an original Kmart. It closed down in 1983 and has been a lot of things since. And most recently a call center, which is obviously obsolete because of AI, but it has these great big ceilings. And we've got 60,000 going to storage, traditional, climate controlled storage like we do. And then we got another 40,000 on the other side that's going to end up being a triple net tenant. But in this situation, very high ceilings on that side. We even looked at mezzanine and we're like, well, there's not even a demand for the base level. Why would we even go up? So we've got a triple net tenant lined up there, but what do the actual units look like? You're not talking about squares on the floor and you can park in your square. You're talking about legitimate build out roll up door with probably a man door and a large roll up door. And you're running your window tinting business out of there. You're running your asphalt lining business out of there. You're running your plumbing supply business, anything else that.
Well, now it sounds like you're talking about a different use case where I'm actually working in the unit. So pro storage is storage.
Right. But that's where they're parking during the day. And then rolling.
You don't want people
businesses.
working.
No, that's small bay flex. Now you could do that too, but now you got sprinklers, you got a different use and occupancy. You're putting in more bathrooms, maybe one in every unit. I've seen guys go back and forth on that bathroom and your conversion costs in your case, or your development costs in our case are way high, 20, 30% higher.
Hold on a sec. Are you making a point that pro storage does not require firewalls and sprinklers?
I am in my development. I may not be making that point in a conversion, so I'm going to put an asterisk on that one. But you might already be sprinklered anyway in that Kmart.
In some of them we often are, and some of them we may not, or we have to. Maybe it's way old. We have to go retrofit or fix everything.
I can't speak to the municipality you're in and what the codes are going to be, but from a development sense, we are not sprinkling. We don't have to because we've got the fire rated walls. And that's in most municipalities we've looked at. There's going to be cases where they say no, in which case we'll say, well, maybe this doesn't work here then. But
partitions like
so we're clear. I am saying you're cutting holes into the exterior of the building for your doors, and you're putting up walls so that my unit's my unit, whether I developed it like Greenville or I'm renting a unit from you at Kmart.
But we're not talking contractor garages, really. For me, what contractor garage is somewhere where a plumber can have like storage and a workshop. You're very specific.
That's small bay flex.
Small. Okay, all right.
That's a different use and occupancy.
Got it.
Now you're working on site. Now I need parking. Now I need bathrooms. Definitely need to be sprinklered.
Yep.
But if it's like a flooring company and they need a place to store LVP or real hardwood and let it acclimate or something like that.
Look at an
HVAC company or a plumber that has, how many water tanks sitting there. HVAC has the units sitting there. I leave the trucks there at night because I live in an HOA and I can't park my truck. Or I don't want to put my truck in my driveway or on the street because of theft, right? I want a place that's secure to store my truck. So think about the father-son electrician team. Here's another use case. Catering company. Catering company needs a retail place, office to meet the bride and groom, the corporate event planner, whatever. It's got to be a nice office. Usually, sometimes there are retail centers, right? You want the foot traffic. They'll pay $35, $40 a foot for the foot traffic and the sign, right? But they don't need to pay $35, $40 a foot to store tables, chairs, and racks of glasses and dishes. They just need a 1,000 square foot box for that. Furniture inventory. I mean, there's so many use cases.
Very sticky asset class for that consumer as well. I'm assuming your retention level is probably significantly higher than.
And because we're storage, not to say you can't sign a year lease or lock in a rate for a year, but we also have the month-to-month option. You're seasonal. You've got 1,000 square feet. You need 500 square feet because you're an HVAC company and it's the winter, and that's when they all break down. So you want to store in 500 square feet an extra 30 units, HVAC units. You need them for 4 months. Great, 4-month tenant.
I love that. All right,
Flex up, flex down.
quick segue here, but basically talking about the same property. Okay. So now let's look at the outside. One of the interesting things of conversions is you go from a big box retail building that may have 200 to 300 parking spots.
Wasted.
Now, all of a sudden, what we need is about 15 parking spots. So one of the things that we'll do is we will out parcel and sometimes sell to a fast food chain or a Jiffy Lube or something like that. But one of the things that we've also looked at is truck parking, boat and RV parking, like basically fence it in. What you're talking about is covered boat and RV parking, where you're putting basically just roofs in the parking lot. Like, talk to me about this. What does this look like? Your metal posts with covered roofs for a couple rows on the edges of the parking lot? Or how does that look?
Yeah, so boat and RV, you have completely uncovered, canopy, 3-sided, fully enclosed. Those are the 4 ways we park and store boats and RVs. Completely uncovered, just a parking lot. You could have a section that's your $75 a month, a $50,000 RV. It's not worth a lot, but I'm not paying $400 a month to put it inside fully enclosed. Right? It might depend on your climate too and your customers and all that stuff. Canopies, now mostly covered. It's just, and by the way, where are we doing this? So in some states where where we can sell power back to the state, we're not building canopies. We're building solar support structures, and there's solar panels generating electricity that I sell back to the state. By the way, the tax credits on that are insane. I'm getting paid by the state for the energy I'm creating, and I'm parking an RV underneath it. Then you got 3-sided, which is just looks like storage. There's just no doors on it. So you got a roof, one side on each end, and a back. Kind of a waste, but it's more. There's more protection from the sun if they're built certain ways than others. And that's really what we're doing here is protecting from the sun. Sure, the elements, wind and rain, or snow and rain and whatever, depending on our climate, but it's mostly they're protecting from the sun. And then you have the fully enclosed inside, which are your contractor units, the pro, what we call pro storage. We call it pro storage because there's all kinds of uses for it. Anything on a trailer, boat, RV, business, equipment, inventory, whatever, or vehicles. So that's what those are your options in your parking lot. What do you do? I don't know. What's that market bear? That market might dictate that it's not worth it to spend $1 on the parking lot. We're just going to park open air, right? Because the rates aren't there for boats and RVs. So that's our option. The other thing you could do is, you got to look at your site. How's it laid out? Is there parking behind the Kmart? Because I might carve that up into iOS yards or truck parking club. Maybe I don't want, or maybe I'm not allowed to have my unsightly tractor trailers parking in the front of the Kmart because of the aesthetics. And by the way, not a great look anyway. Maybe I put them in the back and I put the nice looking RVs up front, or I would probably do canopies. If it was up to me and it was, a blank check, I could do whatever I want. I'd probably go canopies up front. I'm thinking about the design and the look and feel of the curb appeal of the facility. But the point is, you have all these options. It just depends on how you look at it. And what we're teaching in our community is really how to source, evaluate, underwrite for anything.
Yeah. Well, it's one of the things that I love about storage is the just multiple niches within niches that you can target. And there's just all these, and it goes all the way back to commercial real estate there's just so many different levers you can pull.
Yeah.
From expenses to, to revenue generation to everything. And it's a rapidly changing industry. We could go on for another 3 hours, Joe, easily, but in the interest of time, we're going to start wrapping it up. One of the questions we ask all of our guests is there a book or resource besides your own that you find yourself recommending more than any other to friends and colleagues?
2 books, neither of which I've written, because I haven't written one yet. On the business side, The Road Less Stupid, Keith Cunningham, phenomenal.
Okay.
Wish I listened to it years ago. On the personal as well as business side, but less kind of numbers, is Be Your Future Self Now. by Dr. Benjamin Hardy.
Oh, I love Benjamin Hardy.
He co-wrote Who Not How and with Dan Sullivan. Yeah.
His next book about scaling.
Yes, it's on my queue.
It's fantastic. There's like knowledge bomb after knowledge bomb, and very, very strong.
I was going to say The Road Less Stupid was more your kind of book.
You'd think so, but I've already colored that one.
Yeah,
so.
okay.
Listen, I'll highlight. You know what this conversation is doing for me is highlighting the power of community. And I know you host a mastermind. And I'm not making a softball pitch here, but the reality is, I thought I knew this industry, and the reality is it's still changing. One of the reasons it's changing is because the consumer is changing. It's not baby boomers in there 2 or 3 times a year. It's millennials sometimes in there 2 or 3 times a month. We have renters that are increasing. When you rent, you don't have the basement, the attic, the whatever that typically comes when you're a homeowner. As that consumer is changing, the industry is changing, and the industry is adapting to that. And then you factor in things like adaptive reuse, cap rate arbitrage, whatever you want to call a conversion. It gets the creative juices flowing. And then you're basically just looking at what are all the different levers that I can pull. And the reality is nobody knows them all. And that is still rapidly moving and progressing. So it's going to be something that's constantly changing. And I think that highlights the value of a mastermind or a community or a group of people that are collectively putting their eyes on something to help everybody unpack that. So with that in mind, feel free to expound on that if you like to. And along the way, help explain that if any of our listeners want to connect with you, hear more about what your group is and what you have coming down the pipeline, what's the best way for them to do that?
Yeah, I mean, the best way is to, you can email me or just join so we have a website that we launched. It's coming soon, but it's ready to receive, a pre-registration for our community that we're launching. But it's called Storage Moguls. We built it because we're practitioners. We're not gurus or professors. In fact, we're terrible gurus. I'm getting better at speaking in public, but I hope people think we're better practitioners than we are speakers. But it's because we've acquired, because I've been speaking at these academies, Scott Meyer's academies, and now fulfilling the education with students. We're interfacing with them all the time. So we're building this based on what we've seen as the gap in the market. And as someone who's acquired 20 facilities over 5 verticals, the only vertical we're not involved in yet is small bay flex, and I'm working on it right now. But we're in all of the other verticals that I've mentioned that are all adjacent to storage, to self-storage. So we saw that gap, and we've built this platform not just for passive investors, by the way, but for people that want to learn the business. We're bringing together. And what I think is, I don't know, you guys can tell me if this is not brilliant, but I think it's brilliant. One of the things I've noticed is that passive investors want to invest. They want to write the $25,000, $50,000 check, or there's plenty that want to write $250,000, $500,000 and really be more of an owner without being an owner, but they really don't know what they're investing in. So I want them to go through, in our community, the same exact training and education that someone who's going to be a self-storage owner operator goes through, because I want to bring them together. I want them to understand what the deal they're investing in, the same way that the guy I teach who's doing actually the hard work, the really hard part is out there, the grind, going out and finding the deal and evaluating, underwriting, closing it. And I want to bring them together on our platform. But then you might say, well, they don't know each other. And my answer to that is I agree, but we're going to asset manage. So we're not just bringing them together and saying, hope it works out. We're going to bring them together in our community and stay involved. So we'll oversee everything for that passive investor, whether that they're at the GP level or just truly passive syndication investor that that smaller dollar amount. So that's what I think is exciting. The community is thestoragemoguls.com. I'm a Penn State fan, so I hate having to say that like Ohio State. It's painful for me to say it that way, but it is thestoragemoguls.com. Or actually, I want to A/B test this. So you can email me at joe@thestoragemoguls.com, or I believe, because we didn't even talk about AI, my other passion in life, which is driving a lot of this, especially our community. Our community is going to be multimodal learning using AI to create multiple forms of the same content. So you could learn through video, through podcasts, through slideshows, through mind maps, through quizzes, through flashcards, like all of the modes are there for the senses.
Based upon the way that you learn.
The way you learn. It's all going to be there for you. So you can consume it how you want, but it's all going to be there. So we didn't even get to talk about that, but I know we're long. So Joe at thestoragemoguls.com or Joe at storagemoguls.ai.
There it is.
I want to see if the .ai starts to take off in this new AI world.
Anytime I see somebody with a .ai, I'm like, okay, they get it. They get it. Like, this is moving so fast. They get it. Like, I put the kids to bed and then I go down the rabbit hole on YouTube about AI videos and what's happening with Grok or Claude or anything else right now. So I get that resonates.
I absolutely love it. I actually started a podcast with an AI guru, Peter Swain. I'm in his mastermind, learning AI. I'm in Claude all day long. Manus. It's changing everything. It's, folks, if you're not embracing it and learning it, just start learning it and using it. You have to. It's so powerful.
Oh, this could have been a 7-parter. Maybe we'll have to have a follow-up on AI, but for now, I just want to say thank you for your time. We really appreciate you coming in and sharing. I've certainly learned a lot, and I've learned a lot about storage, which isn't something that happens every day around here. So really appreciate it. Look forward to connecting with you, hopefully in person next time, and getting you back here on the podcast. So you've already let us know how our listeners can connect with you. I'm going to be checking that as well. So just want to say how much I really appreciate it. Thanks for your time today.
May I thank you?
Of course.
Thank you for having me. And also I like to thank everybody, not to be long-winded here, but I like to thank every host that has me, because you guys are doing what we didn't have 30 years ago. It's providing this platform, this information, this podcast, bringing on, hopefully I didn't suck, but bringing on great guests to deliver this information, which was really hard to come by 20 and 30 years ago. So thank you for doing what you do.
No problem. Yeah, man, I remember when I was going to the library and getting audiobooks on CD to try to learn about real estate investing.
Now you can drive around and listen to you in your car while you're looking at deals.
That's it. And I recommend everybody does it. Hey, thank you, Joe. We really appreciate you, man. Thanks
Thank you.
a lot.
Thank you so much for listening and watching the Truly Passive Income podcast. If you liked the show, if you think it would be useful for someone else, the greatest compliment that you could give us would be to share the episode. Leave a comment down below or leave us an honest review. If you have any questions, don't hesitate to let us know down below. And remember, with truly passive income comes freedom of time, place, and the freedom to pursue your higher purpose.